Boom. Alright, what's up you guys? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you about my current opinion around the equity markets in the wake of all of this geopolitical turmoil. Obviously, we will be briefly touching on the fundamentals and the macro factors that are looming over the markets right now. But in terms of the charts, which we will be spending more time on today, I want to share four with you guys. The first of which is going to be the SPY, or the S&P 500. This is the chart that I feel best sums up the US equity markets. Next, we will be moving on to the triple Qs, or the Nasdaq. This is a more tech-focused sector, or ETF, of the US equity markets, and the price action that we saw in the triple Qs today was staggering. And I want to talk to you guys as we go over these about why these extreme levels of volatility, even more so than there has been, are worrying me about what is to come. Next, that's all the US equity talk we are going to be having. Next, we're going to be talking the king. Got to move on to Bitcoin, leading an absolute charge across the crypto markets. So very exciting price action there, but this is an absolute whipsaw as well, along with the rest of the markets. So everything that we're seeing right now, you guys, I will say this right off the bat, the short-term price action is staggering and it's very, very confusing. So I am still leaning towards my macro bearish beliefs, but I will, of course, give as reasonable of an argument as I can for the bulls when it comes to the short term, and view these as objectively as possible. But I do want to let you guys know once again that all the macroeconomic factors that I've been talking about that I do that make me favor the bearish side in the medium to longer term still apply, even more so than ever with what's going on in Russia and Ukraine, etc. Again, we'll get into that, but just want to let you guys know right off the bat, give you guys a little heads up. Okay, lastly, on the charts, we will be covering the base of all macro, the king of macro, and that is the DXY, or the US dollar index, to close it out. Okay, so those are the four names we are going to be discussing on the charts today. Before we cover the charts, before we dive into the charts, we're not going to be talking too much macro, you guys. I don't want to touch on this and harp on this anymore than is necessary. You guys have plenty of other places to go to for the geopolitics and the opinionated side of this. But I do just want to address the situation quickly by reading the intro to the newsletter I sent out this morning. Also summing up a few of my general thoughts around the US equity markets and crypto markets, etc. And then we'll dive into the charts and I'll expand on any points that I covered in this if necessary. Okay, so it's a bummer of a day, team. As you all know by now, Russia has officially launched an attack on the Ukraine. I'm not going to get into the specifics of this because that isn't my place. There are plenty of publications you can turn to for more in-depth coverage. That said, I do want to express my condolences for the citizens of Ukraine. It's sad that thousands / millions, maybe even more, of innocent individuals have to suffer at the hands of a few punks with power, but that's the unfortunate reality of things. Humans have come a long way, but we're still a very tribal species. Many of the borders we see on the map today are the byproduct of war. It's in our DNA to want to conquer using brute force. That said, it's also archaic and shows an extreme lack of judgment and reason. Putin will go down in the history books with a stain on his name following these foolish actions. Thoughts and prayers to all the citizens of Ukraine. On a brighter note, events like these really put things into perspective. I feel even more fortunate than I typically do for all the amazing things that I've been blessed with. Gratitude is one of the most powerful characteristics you can possess in this life, so do your best to practice it. Okay, so a little PSA, you guys. Again, just wanted to address it, just share my condolences for, the poor people of Ukraine. These guys don't, I'm assuming the far majority of them want nothing to do with violence. They don't want this, but again, that's the unfortunate reality. That's how the world works. But I am an optimist. I am just by nature. I feel it's more rational to be optimistic than pessimistic. You'll just live a happier and more fulfilling life that way. But I do hope for the best when it comes to the situation, and all is resolved in the most timely and least bloody way possible. Okay, so that's how, you guys. Little PSA, housekeeping, that's what I meant. That was a PSA, housekeeping. If you guys want the daily newsletter, if you want to know exactly how I'm trading through what I foresee will be a lot more volatility on the short-term time horizon, check out my complete portfolio. Update this bad boy every trading day, let you guys know exactly what I'm trading, when I'm trading it, and why I'm trading it. $15 a month, $40 for every 3 months. First link down below. Means a lot if you guys check that out. But if not, no worries at all. I appreciate your eyeballs right here, right now. Let's close out the week. This is the last video of the week. So let's close it out, you guys, and talk some technicals. So The price action that we saw today was absolutely staggering. I know all of you guys experienced it. The huge fall off. Futures last night down 2-3%. And then as soon as the market opened, everything just whipsawed right back. It was crazy. Okay, so the S&P 500, we are on the 4-hour charts. We're going to be looking at all these on the 4-hour charts. Actually, you know what? We can look, we'll look at the Nasdaq on the 15 minutes. But the S&P from the low, from where we gapped, the big old gap down, bottomed out when the market opened. From the low to the high of the day, which is where we closed out, the S&P traversed 4.33%, which for the S&P in a single day of upside is pretty damn staggering, okay? But I am still worried. The reason for that is because we are still in a very obvious downtrend in the wake of, again, the most significant geopolitical conflict that we've seen in years. Okay, so that said, I do still lean bearish on the S&P. I will say there is potential for a bounce on the short-term line of resistance, this white line right here. I do think when it comes to the short term, maybe even by the time you guys are watching this, as we close out this compressed 4-day trading week, I do think it's possible we see a bounce to the upside, maybe some sideways price action to test the line of resistance on this current downtrend, which would take us just, maybe like 1% to the upside. But again, you guys, in the wake of everything that's going on, and I address this later in part 2 of the newsletter, I think, I understand the argument for U.S. equities. Okay, the Russian stock market sold off at 25%. The Russian ruble is trading way down against the U.S. dollar, the Dixie, and European markets are selling off as well because this is obviously a European crisis this is taking place on their soil. So I do understand that capital doesn't have many other places to go aside from U.S. equities. That said, this geopolitical conflict creates for general uncertainty. That creates for fear. Bulls do not like fear, okay? Fear always favors the bears. Therefore, I lean bearish. There is still the fact that the Fed is going to come in guns a-blazing, especially with oil so high, and raise interest rates even in an even more hastily than previously anticipated, okay? So the Fed's going to step in, raise interest rates, good for the dollar, bad for the financial markets or the equity markets, crypto markets, etc. Okay, so there's that. There's the fact that earnings season is all over the place. Okay, some companies are reporting awesome earnings, some are reporting terrible earnings, more so falling on the terrible side. Okay, so just weighing that scale, earnings are negative. Coinbase just announced earnings. They crushed their Q4 earnings, obviously, because if you guys saw November, that was a lot of volume, and Coinbase is obviously going to see more revenue when there's more volume in the crypto markets, okay? That said, Coinbase popped, but they gave weak Q1 guidance, which is also pretty obvious, and even though they've fallen so hard, they're still falling in after-hours trading today. Maybe that changes tomorrow, but in after-hours trading, Coinbase was falling. So my take is that if Coinbase isn't going to make it after some pretty damn solid earnings, then it just doesn't make sense that any of these companies will. And the tech, again, the reason we're looking at the Nasdaq is because what I think we saw today was just a bunch of trigger happy shooters who got way too ahead of themselves in buying the dip. Okay, so I'll say that right off the bat. Anyway, back to the technicals. Sorry for that little tangent, but I feel it was relevant. Back to the technicals, I do think maybe we come up, go sideways a little bit to the upside. I don't think we're going to see more price action like we did today, if I'm being honest, but hey, who knows? We have two lines of resistance in play. The first, obviously, this short-term line of resistance on this shorter-term downtrend white line, and then the red line, which is the line that I would consider to be the line of resistance on this medium to longer-term ascending channel from the S&P's all-time high back here at the beginning of the year. So maybe we see some subtle upside, but I still think that we need to at least revert to where we were back here. You guys, again, reversion to the mean. This isn't even a reversion to the mean. This is only where we were like a year ago, okay? So just a year ago, the SPY was at 395. I don't think anyone in their right mind can say that the U.S. economy, consumer demand, consumer spending is at a better place than it was a year ago, and therefore the S&P 500 does not deserve, or you cannot rationalize the fact that we are at the same levels that we were a year ago. So I think that we need to at least correct to those levels. I do think that the S&P or the SPY specifically will see sub 400. How low do we go? How much lower than that do we go? I don't know, but I do think sub 400 is still in the cards. That would take us down over 7.5% from where we currently sit, and yeah, whether that takes another week, whether that spans into early March, I don't know, but I do think that we will see more downside, even if we do see more short-term flash upside. Okay, and that same principle, that same kind of those same principles apply to the Nasdaq as well, just in a more expedited manner. Okay, so the Nasdaq from the low to the high. Let's take a look at these on the 15-minute candles real quick. This was insane, you guys. So this is where the market opened today, right? This is where the market opened, all the way gap down, heavy gap down. Nasdaq probably down over 3% in pre-market trading. Immediately got eaten up, and over the course of the day, just ripped to the upside. Okay, and from the low to the high of the day, from the open to the close, pretty much, because it was just a constant route to the upside. The Nasdaq saw, I should say, a 7.15% gain. Okay, and that is staggering, and that scares me for the Nasdaq 100, which is obviously one of the largest ETFs. I mean, it's the S&P 500, the Nasdaq 100, and the Dow Jones Industrial. Okay, that's pretty much the entirety of the U.S. equity market. So the fact that we're seeing a 7% move up in tech is staggering. Granted, we did see a big old move down yesterday. There's a lot of volatility in general right now. But again, you guys, volatility works both ways. The Nasdaq is coming up on a pretty significant level over here. This yellow line, just a previous ceiling and floor for the Nasdaq in the past. So obviously, right here's a great example. Again, these previous lows will act as new highs. Previous floors act as new ceilings. Okay, so I do think the Nasdaq is coming up on some very significant resistance here. It's still obviously in a series of lower highs and lower lows from its peak back here, also in early January of this year, still in this descending channel. And I do think the Nasdaq as well. I think, once again, investors were getting ahead of themselves today. I do think more downside will follow this irrational upside. And that would take the Nasdaq, again, early March. We'll just say March 4th. I do have a few price targets. I believe in Bitcoin. I have a target for March 4th here. Would take us down to 300. Again, psychological even. Also, the high we saw back here in September of 2020 after that crazy rip from the lows, the COVID lows. I think that's reasonable. Again, you guys, given this rate, this environment of raising rates, don't fight the Fed. It works both ways. It worked on the way up. It should apply equally as well as much on the way down, especially at this time of fear, uncertainty. Again, everything going on, Russia, Ukraine, geopolitical conflicts, China's freaking getting involved, and we all know what happens when China gets involved. So, I don't even know what that even meant. But, hey, if you know what happens, let me know in the comments down below. But Nasdaq, I do still think more downside is ahead. I think what we're seeing right now is a bull trap. And unfortunately, for all the Bitcoin bulls, that does apply to Bitcoin as well. Although Bitcoin looking very strong right now. Like, this is like, it's so, when do you ever see this? Like, when do you ever see a 15% correction followed almost immediately in the span of, the same calendar day? You could see a drop of 15% immediately eaten back up by a gain of 15%. Okay, so that is insane. That's crazy. But again, you guys, I still think that people are kind of getting ahead of themselves. And the volume we're seeing here on Bitcoin is crazy. What's TradingView saying right now? Bitcoin is still at a sell on the technical. So, the TradingView bull meter, always the cherry on top. And it is that way for the SPY and QQQ as well. So I do still lean bearish. Again, for not only the technicals, still lean bearish in my opinion, but everything else we've been talking about that has only escalated in the past 24 hours still is equally as applicable. So I do still lean short-term bearish on Bitcoin. I do think Bitcoin, although it has once again broken this previous line of resistance right here, broke below it, bear trap, broke above it. I think this is another bull trap. Again, there's just crazy levels of volatility right now. So I don't think we see a sell-off like this again. I don't think we go straight down, but I do think that over the course of the next, this one's March 1st, I guess. So this would actually be very satisfying to see. The reason for that is because this is the intersection of this short-term previous line of resistance right here that I do think will be tested as new support, while also the longer-term line of resistance that I think will have to be tested as new support at some point. So, okay. Again, resistance, very significant long-term resistance once Bitcoin broke this white line right here. You see that big rip to the upside right here. I do think this needs to be tested as new support, and this would just feed into everything that I've been thinking, all the price targets that I've had in my head for the majority of February, which would take us to, I guess, March 1st, March 2nd, give or take a day, back down to about $29,000, which would result in 25% of downside from here. And just, again, you guys, another bottom, another revisit to these lows. Because if you guys have played bull markets before, if you guys have played hype cycles before, this just doesn't feel, this hasn't played itself out yet. And hey, maybe we do see some upside. Maybe there is just some fear and FOMO on this rip to the upside and people thinking they missed the bottom. But in my opinion, I'm not worried because I do not think the bottom is in yet, and I do think a revisit to the high 20s is still in order. Now, again, whether that takes a week, 10 days, 2 weeks, a month, I don't know, but I do think that over the coming in the not so distant future, we will see a high 20K Bitcoin. Okay, let's close it out with, once again, the king of macro. That is the dollar. The dollar absolutely ripping up in the wake of, again, just all the geopolitical turmoil. Other fiat currencies, the Russian ruble, obviously, is the prime example of this. The Russian ruble down, I believe, as high as 25%, which makes perfect sense. Obviously, those are going to be converted into US dollars if possible, and that is why the Dixie is climbing. A lot of other European currencies. Again, this is on European soil, therefore Europe is just being hit hard by this economically. So, US dollars, the global reserve currency, is in high demand during times of fear, and we are ripping up right now, correcting a little bit, but as anticipated, we are beginning to make our way up to test the line of resistance on this ascending channel. Do I think this keeps coming up? Yes, because this is a very, very bullish trend, and again, when the dollar appreciates in value, it typically means that the markets and primarily, if I'm being honest, inflation hedges, Bitcoin being the king of inflation hedges, but also, again, Bitcoin's also a currency, and a lot of people are beginning to view it a little anarchistic, but view it as the global reserve currency. So maybe a lot of European capital is beginning to convert to Bitcoin. Okay, so that's kind of, again, you got to play the game theory of this a little bit. You got to think about the different scenarios that could be happening. Put yourself in Europe's shoes, put yourself in other investors' shoes, and yeah, the Dixie. Just looking at this chart, just looking at the tape, it obviously looks like it wants to see more upside, which I do think is likely. Now, again, will it affect Bitcoin? I don't know. Will it affect gold and silver? It is obviously affecting gold and silver. Silver looking wild right now. We'll be covering silver soon. I've been talking about that in the newsletter as well. But yeah, just keep it on the Dixie, guys. Dixie is still looking strong. We ripped up. That's a pretty unprecedented rip to the upside, but these are unprecedented times, and we'll just have to wait and see what happens. But once again, you guys, I do still lean bearish. The feel of the markets, this is not a bullish environment. Nothing feels bullish about the macro right now, so I have no choice but to lean bearish, and we'll call it there, you guys. If you agree, let me know down below. Let me know if you think I missed anything in this analysis. If you disagree, drop a comment down below as well. And of course, let me know why and rationalize your thoughts there. And yeah, just pray for Ukraine, you guys. And be thankful for the beautiful lives that we lead here in the US or wherever you are, if hopefully you're not in Ukraine and you're a free person, okay? So we'll call it there, you guys. I'll catch you guys downstairs in the comments. And until next time, always remember, take action, make waves. Peace.